Just hold tight to be you and leave you lonely with their lies. 'Cause now staring right back at me, but they won't see me cry. This fight wasn't made for everybody, but it did for you.
Evening, guys. How are you all doing?
Oh, Jack.
Easy, mate. Easy, mate.
Say again.
How's it going, buddy?
Good, mate. How are you?
Amazing.
Top man. Okay, cool. On the chat, Scott, Ali, iPhone. I never remember who iPhone is. Evening. Callum, you need to speak to me tomorrow. Jesus, sounds like you're gonna fucking take me to the headmaster's room. Structure mapping, that is, let's do the videos. Okay, cool. Anybody got anything to look at, guys? Any questions? Anything you want to cover, or so I'll leave that for now. Okay, so anything else? Anything you want to cover, guys? Anything at all? Doesn't have to be about supply and demand. Obviously, I'm sure a lot of you know it's been over 5 years. Been doing smart money concepts off and on. Last sort of 18 months, pretty much all the time. So, any questions, guys? If we don't know the answer, I will do everything I can to get the answer for you. Obviously, if you want to know about quarter theory and all that stuff, you can asking Sean. If you want to know about the German 30 strategy, then obviously ask Matt. For anything else, I'm more than happy to have a look, guys. No, you're all good. Nobody's looking at anything. If you got anything, any pairs, guys, just post a link in if you want to. By the way, if you don't know that, how to do that, there's a camera at the top here, top right. Just copy chart image or link, either one, and then just post it in here. I'm sure you all know how to do that. Okay, so if there's nothing in specific you want me to cover, then I just go over the same things, guys, because closed mouths don't get fed. So if you do have anything, please say. Otherwise, it's just the same things every week, and you're not really going to learn and progress and advance. And I'm not saying I can bring you something new every week, but there's a lot of stuff in my locker which it's all relevant. It's all good. Yeah, repetition is good. Repetition is repetition, right? It is good. AU on the 15 minutes. Okay, cool. AU, AUD, USD. I hear this is your favorite pair, Ali, and apparently you trade it at 3 a.m. in the morning. AUD, USD. AUD, 15 minutes. 17th November. There you go. I spotted it straight away. Ali to me machine. Okay, 8:15. I'm presuming you know, Ali. Can you tell the group why you're choosing that candle?
Hello, can you hear me, mate?
I mean, yeah, you're right.
Yeah. Basically, it took a lot of liquidity to the left.
Yep.
Put a new low in, and it dropped so quick. I'm presuming there'll be buy orders still in the wick waiting to be closed out, and it's tried to come back up to it and failed. And obviously, I think you'll have sellers in the market over on the right.
Perfect.
Kind of expecting it to come back up into that area and then sell off.
Yeah, 100%. Well, not 100%, but yeah, I do agree with you. 100%. We have perfect liquidity here to be taken on the way up. And exactly like that, just what Ali just said. So we had equal highs here. Let's move this for a minute. Equal highs here perfectly. And then, surprise, surprise, obviously, like I say to you, do not become liquidity. So some people would have tapped into this green candle here, which is obviously also important to look left to see whether this would become liquidity. So if this had not tapped into this, then I would be concerned because it wants to go above and tap into it again. But obviously, that I believe there's this yellow box here. So 15 minutes. There's no reason for me now to believe that price really wants to go above any higher.
Everything to the left looked fairly balanced to me.
Yeah. So it's just remember the King Kong thing, guys, going from swing to tree to tree. As long as they're all connected, he's joining the dots as such. So joining the boxes, if you wish. So that's been tapped into. That was created liquidity. That swept that, and then it created even more liquidity, and then that got swept and perfectly into the actual body, which that doesn't really bother me, but it's just a typical thing that the smart money concepts would be looking for. And then this is the actual candle, as Ali says, that's done damage. Yeah, it's very, very important, guys. You need to identify the candle that swept liquidity. If there's no liquidity, if there's no, let me just do this. Turn this white. Might work. Just imagine that's white. Just imagine you can't see the wick in the background. Okay. So if this was like this, I would 100% be screaming that liquidity is obviously sat above there. So I think I said it last week. So as above, as same below. So basically, what you're looking for price to do is the same as what it has up below. So it swept liquidity to the top. Now we're looking for it to sweep to the bottom, which it obviously has done. Okay, plenty of times that swept that, and so forth. So as it's created more liquidity, what we do have is obviously liquidity pretty much sat everywhere to be taken out. Okay, so we have trend line liquidity here. We have this low to be taken here. Pretty much equal. Is that equal? No. That's to be taken there. And obviously we have this trend line starting here. Smart money concepts would be screaming from here. They would 100% be selling from here. I personally think this is a totally wrong place. Because of what reason, guys? Somebody other than Ali tell me. Why are we not taking a sell from here? Yes, you'll get a reaction from here, but is it an actual solid point of interest that you should be looking at?
There's loads of buy orders that need to be closed above it.
Yeah, but what is this?
Don't become liquidity.
Yeah, it's liquidity, right? This is screaming to be taken out because the actual move to the downside was this. So if we mark this out as swing high and swing low, that is your range, right? That's your highest point, that's your lowest point of this leg. Yeah, so this is the zone that we're playing with. So this is all internal. I don't really have much interest in anything in here. So we're looking for obviously price to do this. Yes, like I say, you will get a reaction from here, probably possibly down to a demand zone down in here. And then back up. Eventually that'll be created your liquidity again. So the reaction from here, most probably, you might even create equal highs, tap into here. Like I say, I don't believe there's any reason, unless we can see something on the 5. I doubt it though. No, that's like Ali was saying earlier on, it's just too clean. There's no reason in there, to be honest, why price would want to come back. There's a little bit of liquidity touch there, but yeah, I'm not really overly fussed about it. If you want to be extra safe, you can put your stop loss above there, really, above that actual high. But yeah, 15 is good. It's been tapped into more than enough times. Tapped into there once, twice, 3, 4, 5 times. It's been tapped into. So yeah, I really don't believe there's any liquidity sat in there. What time was this? Yeah, 8:15. So just after London Open. Yeah, so again, that was a trap in there. So people would be selling from here. Yeah, people smart money concepts see the break of structure to the downside. Where did the moves start from? Surprise, surprise, pretty much into the golden pocket ratio. Yeah, taps into this order block, and people would call it. And then what happens? Yeah, perfect. So let's just say, so this is how I used to draw out my, what was that, 15-minute? I don't have it anymore. Okay, I'd be labeling this as a 15-minute. And then enter from here, stop loss above it. Look what happened. And this is, somebody's asking me the other day actually, don't remember, why have I shifted away from smart money concepts? Not so much I've shifted away from it, I'm just identifying these traps now, and this was very, very frustrating. Yeah, even a little bit more frustrating than when I was learning retail trader stuff and trendline trading. Yeah, it was super annoying. It's very frustrating just to be able to take a trade from here. I thought, yeah, I'm amazing, I'm good. Yeah, I'm trading with the banks now, alongside the banks. And then it'd give me, what did that give me? Also went to drawdown of 7 pips, then gave me 5 pips of profit, and then bang, would have taken me out, and then dropped massively. So I just feel this is exactly the same as what I used to do as retail trading, where obviously price would touch it, react, touch it, react, touch it, react, touch, and then bang, sweep, and then drop in the direction I was actually looking to go with. And this is exactly what's happening with supply and demand. Yeah, so I would say one of the biggest things, I'm not saying I'm perfect, but please take it from me, just allow the damage to be done first. Why don't go diving in to be punished, to get damaged, to get a right hook in your face? Yeah, leave that to let it be. Look what we've just done now. We just been patient. Yes, taking a little bit of time since the 17th. Remember what we today, 19th, is it? 20th, 3-4 days in, but because we waited for that and not just jump, whatever the right word is, we now have a potential nice trade on our hands to take from here. Yeah, I know your stop loss doesn't have to be above there, because what we should be looking for when we get into the yellow box, into the zone, guys, what should we be looking for? One minute, yeah. What else are we looking for?
OFRA.
A touch, then take the apples. Yeah, so we ideally looking for a touch is what is this touch?
Liquidity.
Liquidity, thank you. And then what do we have? Reaction, then what we're looking for? Sweep, thank you. So there's no purpose for the price to come back up now. It's done the damage. It's tricked people here, the early sellers. It's tricked the sellers in. It's dangled the carrot. It's given a little bit of profit. They think, yeah, wow, amazing. Yeah, possibly. Obviously, if they were retail trading, well, they wouldn't even know about this strategy. So I doubt if they were, let's just say they were trading the support and resistance, their stop loss may be above that wick, which they'll be fine, but not many people will know that. Then sweep to the downside. Then from here, what we're looking for? Are we entering off this actual setup, or are we waiting for something a bit more redefined? Order flow shift, yeah, and we also need what's the other thing that starts with OF as well. It finishes with 2 different letters. Thank you, Callum. Thank you, Alan. Does anybody know or not know what OFRA is? Offer. If you don't, we're probably not going to say anything. So if you don't, put a 2 in the chat. Do not be shy. Yeah, this is the problem, Jack. Dave Skelding does know, James does know. Okay, thanks for saying, guys. Okay, so let's go back to what Jack is saying. Been speaking to Sean, which is an actual idea from Callum, so you can thank him. We're going to make a video to break down all these words. Callum's idea was to get all of TFT and all of us to use the same words, so we're all in sync and we're using the same things. The issue with that little bit is you guys will just stick to what you know and what you're happy with, such as Sean uses break of structure. He doesn't even know what change of character is. Okay, so it's obviously just depends on, if you've watched me, then I'm sorry, but I've fucking brought loads of different things to the table. But if you ever look at a different trader, which you may very well do, these are the letters and these are the words that they're going to be using. Okay, so different words in different parts of the country will mean different things, right? So down London compared to me up here, down in like Geordie's, why man? What the hell does that mean? Obviously we know what it means, but we would never use it. So it's terminology that I think we all need to be able to know what it is and read it, understand what it means. So yeah, I'm going to do a video probably Monday, not tomorrow, maybe Tuesday, maybe. It'll be soon, okay? So we're just going to break it down. We're going to try and use the same letters, but like I say, if you're used to using chalk or break or structure, then you're going to continue using that. Okay, so we're just going to have a what's it called, like a key, right? What the hell's the right word? I don't know. When you open
just a key for your abbreviations.
There you go. Thank you. Abbreviations, yeah, of what they all mean.
Yeah, glossary.
Again?
The glossary.
Yeah, glossary, yeah. So yeah, and what I'm going to do is also do an Excel spreadsheet, and then have a link in the Excel spreadsheet so you can click on it so you can actually see what it means on the charts as well, and obviously I can compare them, and yeah, so hopefully it'll break things down. So that will hopefully help. So Jack, going back to your comment again, it means offer is order flow realignment. So that will answer Dave and James and Luke and Mr. iPhone. Yeah, so order flow realignment is when the 4 hour is basically pushing downwards. That's a fucking terrible line. Yeah, so a 4 hour is overall in a downwards movement. We want smaller time frames to align with that. So basically going in the same direction. Okay. So when we're up here, obviously this now is counter. So this is not, we're not aligning with the higher time frame analysis at the moment, right? This is a counter trend trade, which I don't trade, I don't buy it anyway. Okay, so this is a counter trend. So this would be called CT. What's it called? Counter trade pro trend. Sorry, my bad. Order flow. Counter trend OF. Yeah. Counter trend order flow. Again, these abbreviations are in the videos for the supply and demand, guys. Okay, so it's just a counter trend. It's just basically a pullback. Okay, like I say, somebody has somewhere's made up all these fancy words and different letters and abbreviations. But like I say, I want you to. I'm obviously not trying to confuse you, but you know, if you're going to do supply and demand, then it's obviously correct to use the right terminology from the start, right? So you understand what we're all talking about. We're on the same page. Okay, so counter trend is not for me. I don't like pulling back, even though this could easily just carry on dropping from here. So that's another reason I don't really want to trade on the pullback. Yeah, don't get me wrong. There's nothing wrong with buying. If you get the confirmations that are there, then feel free to buy. It's totally fine. So yeah, order flow realignment is obviously when prices tapping into here, we create that liquidity, we pull away. Okay, we then sweep. Okay, the liquidity is done, and then we need this to break, which is our order flow shift. And some of you guys will be thinking, well, last time I checked, that's a chalk. It is the same thing. Okay, an order flow shift is an indication that price is wanting to shift in the opposite direction. Okay, so this will only be labeled as an order flow shift and identified as an order flow shift if it does not push up to the opposite direction and creates a new high. Otherwise, that would be liquidity sweep. Okay, so it's very, very important that you understand the difference. Obviously, you won't know that until potential price has done its thing and respected that area and then dropped again. Then you can label that as order flow shift. Okay, so in one way, it's another benefits thing you can't label it until price is played out. Okay, so again, that's just, you have to be patient. Okay, so going for the order flow realignment, possibly create equal highs with this here, liquidity, come back, hover around, just being gay, do nothing, and then tap in perfectly into there. Some early sellers will sell from there. All it is just a trap to be swept, to be taken. Yes, liquidity created there. We then jump to the downside, liquidity down here, and then what we're looking for is an order flow realignment again from here. Okay, so you need, when you're taking, if price is continuing up to the upside here, this is not realigning with price. If price on the higher time frames is heavily pushing to the downside, this is not realignment. This is a counter trend trade. Yeah, so you want everything to align in the same way. Okay, so hopefully that makes sense. So in here, that's not really relevant. Let's carry that through. So we'll have, let's just say equal highs through here, and liquidity created in here. So LTT, liquidity to target, Jack, if you don't know, liquidity to target and liquidity to take. We can label this LTT. Okay, liquidity to target or liquidity to take. Okay, so that's to take, and this is the target because we're selling. We need something to target. Okay, so that is obviously the same thing. Just one's to take, one's to target. We do the sweep, and then in that sweep, we potentially get a new supply. Okay, so like Ali was saying early on, this is the candle that's actually done the damage. So you need to identify which candle took liquidity. Okay. If you can't see a candle that's taking liquidity, do not even trade it, because there's a good chance you are what? If there's no liquidity being taken, what do you become?
Liquidity to take.
Yeah, you are going to be liquidity. Yeah, you may get a small little trade from it, but eventually you're going to be swept. So if you're sat there thinking, I can't see a sweep, I can't see anything, there's a very good chance you are liquidity and you're about to be taken at some point. Okay, so we tap back into, this is a 15, so now we'll be jumping down to the 1 minute, let's say, for a refined entry. And what you have done is obviously, rather than take a trade from here, which is 18 pips stop loss, you now potentially have a stop loss of 5, 6. I would add 2 pips, so 7. Yeah, 7 pips stop loss, which obviously will make a world of a difference to our risk reward. Above there would be 17, 18, let's go 19. And from here, we would potentially have 70. Let's go down to, down to that low there, down to that low there. So this one is 3.4% and this one's 10. So you more than triple, or pretty much, yeah, triple your accounts, your potential reward percentage growth. Okay. There was another sell on AU slightly to the left. If you want to go over it, there's another sell on AU slightly to the left.
If you're on the 58, on the 15,
yeah.
If you go to the big wick, which pushed up.
This one?
That's the one, yeah.
Mm-hmm.
I had that. I didn't actually catch this sell. I was in a buy up to that area. I had a 1 to 9 up to it.
Okay.
But it missed it. Yeah, it was pretty much perfect. I had my zone because it dropped down, created a low, which was my sort of order flow shift.
Mm-hmm.
Came back up, and I had my zone to be taken marked from the top of that wick to the wick of the next high.
Okay.
So where the
here is that?
That's it, mate. Yeah. Then you can see it started creating lower highs all the way down, creating like a trend line liquidity down there, and then it came back up.
Number 5, we have this, which we tapped into, and we get on 3. We get that on the 3, which is tapped into, and the 1. There you go. I'd be refining this to there. Did you go down to the lower time frames, mate?
Yeah, the entry was on the 1 minute.
Okay.
For the sell, but it wasn't there. It was right away. It basically came back up and swept into that unmitigated zone. Yeah,
it was further down, further across.
Yeah, that's it.
Yeah. So this is a perfect example. You can see here on the 1 minute, that green candle here, that was an actual potential supply, but you actually start noticing, well, this was actual, and this is the difference between, so people with smart money concept, they was like, oh yeah, that was the last candle up, right? Which it doesn't really make a difference in here because it's like 2 pips apart, but this is the actual candle. I personally think, we'll see in a minute, this is the actual candle that did damage. I would take the whole range, to be fair, so we'll see which one it came off, but that, yeah, you need to identify which one did actually do the damage, but that perfectly touched the green zone, and people would be selling from there, which I'm guessing gave you some sort of profit. I think it comes up again, doesn't it?
Yeah, it starts making like lower highs now, which I think is trapping sellers.
Uh-huh. That's more liquidity just been created. There you go. So perfectly into the 1 minute, yeah. So if we delete that, all this was with liquidity. Yes, don't get me wrong, you could have traded from it.
The 1 minute gave a great entry, a great setup after it tapped it.
Yeah, so obviously in between the 2 dashed lines, that's your 1 minute, that was over here in the wick. So what do we call this, guys? What's inside the wick? What's it called?
Extreme.
Thank you. Okay, there we go. That was your trade. That just even down to this sort of area here to take that low out was a nearly 1 to 3. Down to this demand was, which is where I was targeted. So this, they're just so weak. You can just notice they're screaming to be taken out. look at that wick there, massive wick, took them all out, and then sort of chilled out a little bit more to then obviously come down and hit take profit. I don't know how far this went.
It went 1 to 40 on the 1 minute entry.
1 to 40. Shit.
Yeah, it was a massive trade. It was huge. I closed out my buy just before it hit the entry on the 1 minute, and I was so busy at work I didn't look at it again. And then when I did look at it, it dropped about 1 to 15, and I was just a bit annoyed I didn't get in. But
yeah, very disappointing when that happens.
But the 1 minute setup, it was pretty much perfect how it played out.
Yeah, it's great. So that there's screaming to be taken. So yeah, I'd never hold it this long, guys, but
No, neither would I, to be fair.
I keep on saying it, one day I will, but yeah, as soon as it got to around here or this low here, even though I'd be very comfortable it was going to drop even further, because it's not showing us any price action, is not showing us nothing has been that's not been violated, that's not been violated, that high there, these highs, that high, there's nothing gone above it to show us that price is wanting to shift to the upside. Okay, so why would you want to come out of it? Yeah, if anything, I'd be taking out 8% at 6.4% and let the rest run. Yeah, so which is what I'm trying to do quite often now. Yeah, Danny, I wouldn't have the balls, mate. No way. So my next target would have been this demand in here, or if they look at a gap in there, which I don't know whether it does to fill it all. So off the 1 hour, you could have potentially, if you're watching this, you missed that trade, you could have potentially taken this area. So this was actual, remember, not the green one. If you guys have been doing smart money concepts, not the one that pushed the price up before the big drop down. We're not looking at the order block. It's the actual one that did the damage. Okay, so that is on the 1 hour. I'm getting it on the 15. Let's make it a bit tighter. Then maybe go from there. Include the whole hour. 5 minute doesn't really change much, to be fair. Maybe the stop loss above. See what happens now. Okay, so maybe creating a liquidity. I don't know whether it taps in or not. That just shy, nearly tapped into it. Possibly on your MT4, MT5, it would have tapped you in, because there's a little bit of difference between trading view and this. And what's that right here? Yeah, it's that here at the moment. So we could potentially see another sweep to the top there, which what we just marked out now, because it's, yeah, maybe not. We create liquidity there, it got swept, and create liquidity and got swept again. But yeah, if the orders are higher up, then obviously it's going to come back. Don't know. Just at the moment, it's reacting from this demand down here. Demand 15. So yeah, just watch this at the moment. It's just consolidating. It's doing nothing since 5:15 on Friday, which is fair enough. Not much movement. So this is what I'd be watching for. If that high goes, and if that gets taken, then obviously there's a good chance that price is going to want to come back up to possibly this area or even higher. Yeah, so obviously this would then be a perfect example of price realigning. So price would need to realign with our overall bias before I'd be willing to take a trade there, because the whole shift momentum, the narrative has changed now from a heavy heavy sells down to like buys now. So that was down there. It was a 1 to, depending on your stop loss, how tight you want it to be stop loss, but 1 to 17 there. So yeah, we'll see, guys. Cool, nice. So if you need any questions answered, ask Ali. He's the man. Is this all you trade, mate? AU?
No, mate, I'll look at a lot of the pairs. I'll just scroll through them when I get in from work and see if anything stands out.
Okay.
But I am leaning to sort of AU. What was the other one? There was another one. A CJ as well.
Okay, yeah. The CJ is nice.
Because I don't get to trade in the day usually, so most of my trading's done between like 6 and spread hours. So
Yeah.
I'm looking for stuff that might move at that sort of time.
Okay. If you're listening then to Ali, guys, the key word was if it's not there, if it stands out. Okay. If it doesn't stand out.
Like most of the trades I see, I happen on them. They're either just about to happen, or you can just see it clear as day setting up.
Yeah. Yeah. If you can't see it, guys, it's either not there, you're trying to force it, or you just need a little bit more practice, which is totally fine. Do not worry. Like this, just to me, seems a little bit messy. Massive gap in here. This doesn't really do anything, right? You need a candle that's done like severe damage and taken severe like liquidity out. This just totally wild. Yeah, it took liquidity out, but it's like, how can you trade it? I'm guessing there's liquidity sat through here, yeah. But yeah, it's just, if you don't like it, just don't trade it. Yeah, so at the moment, can't really tell what on earth this is doing, to be fair. It's just consolidated for how long? 12 o'clock on Friday until close, so 9 hours of consolidation. You can't really trade from there. You could have,
Isn't it?
yeah, you could have tapped into there, but not the greatest. It's just not clean. It's just, the next tap I would say would be here maybe, but then I'm kind of worried, thinking, well, there's something above here. Then you also think, well, liquidity above that, there's a massive gap in there. So there's too many risks, really. Yeah, unless price literally did obviously realign with what we wanted to. Tap, sweep, break to the downside, tap into something else. I still wouldn't go for the first time and would be waiting for a second to drop. So then only potentially sell it down to there, which would be okay. If you got a tight enough stop loss. I only literally go for like 1 to 2, 1 to 3, guys, 1 to 3 mainly. But yes, it's just do what you want, do what you can when you can. If it's not there, just don't trade it. There's a lot more opportunities that will come.
I did have a sell on CJ on Friday. When was it? Yeah, Friday.
Friday. Was it from here? Was it? Yeah, Friday. That was at midnight.
No, I'm just trying to. What are you on the 15? Hold on, Jason. Let me just find it on the 15.
Okay, mate.
I had it actually on the 1 minute. It was taken. It was on the 18th and on the 18th, on Friday the 18th, about 9:30. I was at home still then. I don't think I had to work late.
Okay. I would imagine you've labelled
That's it.
out, and then
it was in there, yeah.
Down to the 1. There you go. That's essentially refined it to here. And then, yeah, that just about took liquidity twice and then dropped. Yeah, so that dropped how much?
It dropped a lot. I jumped out after a 1 to 2.6 because I didn't like the way price was moving, and then it just melted away.
2.6, is it around it in here maybe?
Yeah, that's it. Exactly where I got out, stupidly.
And this is exactly what I do. I start to panic, see this massive pullback, and then eventually it just drop even further. But yeah.
Yeah, I panicked and got out as it started to come back.
Locking that profit, though, mate. It's all good.
Well, yeah, there is that. It's It could have come straight back up and taken me out easy enough.
Yeah. So yeah, the smaller time frames do work, guys. So if you don't really want to work with a 4 hour, please start with a 1, drop down to 15, and then look for a potential redefined 1 minute, like we just exactly done then. So you do need some sort of like projected, not data, but you need to see something. It's just 1 minute is just wild. You can't just 1 minute by itself. You think, oh yeah, that's pushing up, it's pushing up. But if you look overall, what's it doing? Obviously pushing down. So you're then pushing against the trend. Now this is a perfect example of. This is the 15. What's the damage? The wick that's swept in here. This is an absolute perfect example. So I would recommend you guys go on your chart and taking a picture of this. Allow all this to play out. Okay, so we'll just jump down. We know the green is the 15 minutes, the box. Now we're on the 1 minute. Yeah, and all it's done is obviously we've tapped in. Look at that. Trap, early sellers. What happens then? Takes them all out. Yeah, what happens to these? Still don't go in too early. Allow it to all just play out. Okay, so I'm going to shift in there. That, yeah, it's a shift, but it's not very strong. And then to the upside, all this has happened. It's only now I would start. Yeah, this is clearly started to. So that obviously was screaming to be taken out, and then obviously we got the shift. Now we're looking at something a bit tighter to get an entry from. So the 5 minutes, you could potentially be looking at this if you're quite an aggressive trader. So that was an actual candle that took liquidity out here above. I think all the damage has been done. Yeah, I don't think it's going to come any higher. It's done what it needs to do. That was the last sweep of all our price action through here. And then now it's just, remember what I was saying not long ago? On that arc motion, right? Ball motion, obviously not this way. It's an N shape this way, isn't it? Go back to 1 minute. Yeah, just see that sort of rounding off. Yeah, until you get that, all that's going to happen is obviously this. Yeah, so you need to start seeing something showing you, well, yeah, hold on a minute, mate. I just, I've been pushing up, but yeah, I'm kind of fed up now. I want to start pushing in the opposite direction. So that was the high, that was the low that put the high in. So there you go, that's your shift of price. Order flow shift. Okay, so this in here got swept to the upside. That was liquidity to take. We then did the sweep. And then, like I said, there's no reason now for price to come back to the upside. 2 minutes. There we go. That's what we're looking at. Liquidity here, that was the damage that got done, so potentially we could see a tap back up into there. But again, as soon as obviously what we've done now is obviously we're on the 15, we dropped it down to the smaller time frames, we're on the 2 minute, you've identified the shift, liquidity has been taken. Where did it start from? From here. Okay, that whole run started from up top. Now if we get price coming up into here, we're looking for also the same thing. It's over and over and over again. Okay, guys. So also the liquidity sat here. So again, we could have equal highs and then it could just drop off again. Yeah, and then price could tap into it pretty much perfectly. And then a little bit of reaction, small little sweep to the upside, drop to the downside. You guys that may possibly watch David, he calls it signature sweep for smart money. Here's where price pushes up in one direction and sweeps down to the opposite side. So that's the signature move. Some people call it, again, it's just fancy words, change of character. And then we'll be looking at something new in this actual area here. So a new supply in here. So allow the price to show you its direction. Don't go diving in, and then just take the trade from there. Yeah, it works out great. If not, on to the next one.
Can I show you a 1 minute trade, Jason? I didn't get in because of spread, but it was just below that area. It was a buy.
Yeah, of course, mate.
If you go down to about 5:30 on that same day, on the 1 minute.
5.
right there. I literally was scrolling through the charts there.
Yeah, oh here.
That's it. The second zone you marked is where I tried to get in for a buy.
Yeah.
Because it swept all that liquidity, didn't make a low, swept it again to the left, and then obviously dropped back down into that second green zone.
Yeah, so we have this in here, all that, then drop, this, and then this got taken, shift, but the actual high was here, maybe here, which that was your order flow shift, showing
That's it, yeah.
the upside, the momentum, and then
we had a big expansion up then, which took the high to the left.
Yeah, perfect, got you.
I literally saw it after it had taken that high and it was on its way down, and I had that 1 minute zone, which had already been tapped once with a wick. I think it was.
So that was the shift, and this was the candle that took liquidity through there. Pull back here because it bought there, or this did exactly the same thing. So this candle in here took liquidity from this here, just below that. Just because it's on the 1 minute, guys, doesn't mean it happens. It's.
I should have bought from that zone you've marked, but I was the orange candle below that.
Yeah, either one would have been. This would have been absolute like double confirmation, because obviously, like you say, it broke that high. So
yeah,
as soon as that shifted, where did it actually start from? Again, smart money concepts. We're waiting for price to come down into this actual orange candle in here, which you can see just missed it.
Yeah, the spread kept me out of that one.
Really changes there, and then bought. That was doing a beautiful buy, which let's make ourselves sick now.
It's like a 1 to 14, I think, or 1 to 11.
11, 12. Crazy, right? That's 30-second chart. So that was from 1831 to about 3 hours, 2.5 hours, 11% growth. Crazy, guys. And obviously, you could have caught a lot of price to the upside. It's just literally the same thing over and over. Liquidity, it's just perfectly there. What happens to get taken, taps into there, away we go. Yeah, so, and until price tells us differently, what's our bias? Buys all day long. Yeah, that breaks, just keeps on breaking. What do we have? That's a stairway formation, right? Stepping up constantly. We've got a bit of a dip there. So yeah, there's no reason why your narrative should tell you any differently. So opportunity here, yeah. As long as it's taking liquidity of some sort on any sort of time frame, that is the candle you should be looking at. That obviously swept that. Okay, so this is the candle we're looking at. Perfectly tapped into there. This candle here, that candle there, did that do damage? Yeah, took liquidity out of here. Yeah, and then pushed to the upside. So again, you had an order flow of shift of order flow to the upside. That wick is telling us. Remember, on the order flow, on supply and demand, sorry, you can count wicks, not just bodies, as an indication of prices wanting to do what it wants to do. Yeah, and then a clear shift to the upside again. This beautiful. Yeah, so a lot of people would be taking the orange, the last down before the up move. They were thinking, yes, as you can see, it works here. Nothing wrong with it, but obviously on a bigger time frame like smart money concepts, it won't work. Okay, they're just looking at a different area, the wrong area, not the wrong area, but the stop loss just doesn't account for these massive, huge wicks that took liquidity. So this is what we're looking for. It's very, very important. You're looking at the right candle. Okay, so obviously that perfect zero drawdown. Absolutely, what, half a pip? Yeah, if that. 0.1, so a pipette. yeah, and then it ran 6-7 pips, but still that's enough. That's a good trade to get. Stop loss below. So even to this high here would have gotten you 1 to 2.5, yeah. And then if you'd have kept it running, maybe to here 1 to 3. Yeah, there's trades everywhere, guys. Yeah, it really is trades everywhere. And when that did the damage, that then took, is it? Yeah, no, equal high, equal low, sorry. Which will get taken on the way down. There you go, just been taken. Was it? Yeah, just about. So that wick obviously smashed all them through. Take that. So always just doing that, just taking liquidity or creating it. Okay, all the way. Just, same thing over and over and over. Okay, so yeah, that's on 30 seconds. But yeah, same applies, guys. If it's more comfortable for you to take a sell from the 5 minute, then take it from the 5 minute. Okay, that's your candle in there on the 5 minute. You could be selling from here, which not the end of the world. You're only going to drop down of, what is that, 6 pips, 4 pips. Yes, there's nothing major, guys, as long as you're in the right place. Yeah, so you're just obviously waiting for the damage to be done to get a tighter entry, to be honest. Okay, so 5 down to the 1. That there, you can see it's just perfectly tapped there. Look at that massive difference. So this is a 3% growth. Make it a bit tighter with doubling our percentage. Yeah, that's the only reason. But if you're comfortable taking the trade from there, then go for it. There's nothing wrong with it. Any other questions, guys? I've got about 15-20 minutes left. I'm going to fucking go to the airport. Last one this year, I think it'll be. No? Nothing?
Have you looked at EU, Jason, at all? Do you trade it?
Yeah, I trade a lot of EU, mate. EU. Yeah.
Have you got any thoughts on it? Market open, what was going to do? I think it's going to sell, but I think it's coming up to sell off from one of the wicks above.
Still in this range from the 4 hour.
I looked at there's liquidity forming on the 4 hour, like a little trend line sort of thing coming down.
Take that whole range. There's one above. Yeah, there. That's what I was looking at. Oh, bad boy there. Let's see. But yeah, for now, mostly liquidity is created there. And we tapped into it. And then we have, is that the trend line you're looking at, mate?
That's, yeah, and there's on the top side as well. It looks like it's forming. You've probably got people trying to sell.
Yeah.
So I didn't know whether it's either going to come into that wick, the highest one.
Yeah.
Or that one, just where you put the line onto.
Is that classed as a bearish flag?
Yeah.
The reason I think it's coming down is you've got that wick,
Yes.
that big orange wick, or the one that came down after the big push up.
Should make your flag there, which obviously creates like that flag, yeah. Yeah. So yeah, I want to see what's in this, in here, in the yellow, 15. Nothing really major. That's been tapped into. Maybe on the 5. There she is. So now in the 4 hour range, guys, which is also the green box. We've chopped down to the 15, which we didn't really see anything. We now have trend line liquidity through here. So that high needs to be taken, that needs to be taken, all this, all this, all this, all this. We have a small amount of imbalance in there to be filled. And we have obviously this 5 minutes sweep that did all the damage. So that's where I would potentially be thinking price would want to come back up to. It's a fair way, yeah. How far is that? 100? Yeah, 140.
Quite a way.
Maybe Tuesday. So if you're on the call, I think it was last week, was it? We were talking about weekly cycles. So Monday typically retraces all of last week's price anyhow. Retraces and fills all these gaps in, takes liquidity and blah, blah, blah. And Tuesday will create your high or the low of the week. So the anchor of the week or the high of the week, potentially. It doesn't always work. So it just makes sense, I guess, if you're trying to try and jigsaw it together and put it all together kind of thing. It does kind of make sense to get our Tuesday high, and then Wednesday pushes into our trend objective. Thursday kind of hits around the objective, which would be, let's go on to the 4 hour. I would personally think here, this demand screaming out maybe here, depends on news maybe, because this liquidity is screaming to be taken, imbalance in here. So that's as far as pretty much I would go, because like I said, I don't trade long trades, which is 240 pips. You'll get a reaction from here to start with. Like Ali said, there's a trend line that's screaming to be taken out here. And obviously all this needs to be taken as well. So I think there's another drive to the upside in here. And then Friday will typically, wherever it lands, whatever it is on Friday, you typically get a 25 to 35% retracement of price of this week's price coming up. And then the same thing again next week, the week after. It's just a cycle, yeah. Like I said, it doesn't always happen. Don't trade it just purely off that. But it's just something good to go off. Yeah, we're still in the 4 hour range. It seems like at the moment it's struggling to push to the downside. So until we get into here, then I've got no intention of selling unless this gets broken through the night. Yeah, so unless this all lists, to be fair. So we potentially could see a sell down to here. Yeah, and then obviously that would be our ping pong, that would be our cause for push to the upside. And then reaction, sweep down to the downside, new supply created, we tap in, we're waiting for the same thing again on small time frame, and then push to the downside, which would be a heavy risk reward. Oh, and this is fucking huge. I'll delete that, but 4 hour. Yeah, sorry, that was a bit quick. So I hope you're following, guys. So down here, that's 22%. So yeah, to me, this is just far too, just personal choice. I really wouldn't be holding it that long. It's 674 pips to get 22%. You know, if I'm getting what, 2% a day, 3% a day, let's say 15%, how long is that going to take? Yeah, we don't know, guys. So, well, how long is it taking to get up there from here up to the top? That's 11 days. Fuck that. Can't be asked waiting that long. Yeah, it's personal choice. Like I say, it's entirely up to you. But if you want obviously try and get a tighter stop loss, then you're gonna have to go down to the seconds, which is very fast, and I don't really recommend, to be fair. Yeah, on the 5, that was the bad boy. Yeah, it'd be nice to. Look at that, I just thrown that blind, and it's perfect. Yeah, so the 5 minute, I would say this is liquidity. All I'm going to do now is just literally create a alarm. That's it. Until price comes up to there, I'll check it once a day just in case price has developed. Well, this, to be fair, the downside, but it doesn't really benefit me anyway because I'm not going to buy from any scenario. So yeah, massive gap in there of liquidity, imbalance to be filled. These are literally just screaming to be taken out. These lows.
Yeah, I saw
that. Yeah, it's just literally any liquidity, guys. It's just everywhere. That got taken there actually. This, it's just as soon as you see these, like they just stick out like sore thumbs. Like you're definitely gonna get fucking done over, mate. Yeah, it's just literally there's no need to them. They're doing nothing. They just sat there for traps of retail traders, obviously, because what they would be doing is obviously they'd be buying from wherever, stop loss below there, and on the way down of potentially this sell that we're going to get, hopefully, then yeah, It's obviously far away, but I'm sure there'll be more in here somewhere. If these, they're just sat there doing nothing. They're just sat there, fucking, they stand out like a sore thumb. Here, all that's just perfect, because this is a prime example. If this did not take liquidity, then it's not a valid point of interest. I wouldn't even think of looking at this as a point of interest. It's done nothing, right? So it becomes liquidity. Unless it's done something, unless it's done a purpose, served a purpose, then yeah, I've got no interest in it. Okay, so same in here. Look how tiny this is. That took liquidity, but it still took liquidity. And then we created a low from it. That's what you should be looking at. It needs to take liquidity, and it needs to push in a low or a high. Okay, perfect tap in there. Look at that. That's on a 5 minute. It's good enough. Yeah, what you're looking for. What's that? 7-8 pip stop loss down to the demand. 5%. Bang, done. Growth. So you have 2.5 2 in the morning. So 2 hours, hour and 90 minutes. Thereabouts 5%. That's it. You shouldn't be trading for 2 or 3 days after that, if not the whole week. 100 grand account, 5 grand done. Packed. Yeah, because all you're doing is following order flow. Yes, the higher time frame was obviously oh no, yeah, we were in the 4 hour, currently in the 4 hour. But if the trade is there, you like it, and the confirmations are there, and yeah, there's nothing really stopping you, because what it did do was obviously create the demand, and it's not just going to carry on pushing to the upside continuously. It's not going to go straight up, is it? So it needs to pull back to tap into where? Demand in here. So there's a good chance the price is going to push down to there. If you have time, can you look at NZD cant? Yeah, of course, mate. NZD, time you want to NZD, the NZD cant, right? Not seen this in years. NZD cant. Price is at come on, just that's the sweep. It's tapped into something, isn't it? You go prime example again. Liquidity, where they tap into. Into there currently, I possibly would be thinking price is wanting to tap into this demand. Push, is it about there? See if my my eyes are very good. Around there, I would say. Let's go to the left. Oh, look at that, perfect. Okay. Here, you could even potentially take that. It's a little bit too big for me, but that's the benefit with supply and demand. You're not taking the whole. You're not going to be trading from like that anyhow. Yeah, because you need for price to realign. Okay, and wait for the new supply to or demand to be created, and then redefine it, and then put your, what are these called? Never remember what they're called. Short position, long position. There's actually called something, aren't they? So yeah, that'll be especially on the 4 hour time frame. Remember, guys, we just have to trade what's in front of us as well. Yeah, so you could be thinking, well, liquidity there, how far do you go? This is the first battle, the first hurdle in the road that we need to get over. So we just have got to trade with what we've got. Okay, so that's swept liquidity, that's done that, that's done. Yeah, I would personally refine it to there. But maybe there's something in that wick. That's the one. Yeah, there is. Okay, so this little wick here has tapped into here. Probably I would maybe have my stop loss above there, just in case you wanted to take that out and just tap into there a little bit again, because maybe on the 15 can we go that far? Yeah, we do have that candle in there. Just tap above there. See, that's not perfectly touched. It's just sat above, and maybe on the 5 minute if you can go that far back. Maybe something smaller, yeah, which is here. It seems pretty small, but you'd be very amazed how accurate this supply and demand is. It's crazy. So now what we have is this has just become liquidity. So as soon as we come into this yellow zone, we'll see how price reacts. If we don't get the reaction that we want, then, you know, potentially it could come into this zone, into this black zone here, which would be more beneficial, right? Why? Because where do you think the banks want to sell from? They want a better position, right? Can we sell higher? Can we buy lower? Yeah, you're getting yourself into a better position because you're gaining an extra 8 pips. Yeah, not much, but you're pretty much doubling your stop loss would be there, which is 28 pips. Now it's just dropped down to 6 pips. Yeah, it makes a big difference. Yeah, until price comes into here, I've literally, you know, got no interest. Nothing's going to happen until it happens. Yeah, so let's play price from here. Delete this all out. That's too long. Yeah, so this is the main, obviously obvious area in the yellow zone where we'll be looking at, but extremes, that's where ideally the highest point. And sometimes what you do see with especially smart money concepts, they'll see that and they'll go, yeah, bang, sweep, and then drop from there, which sometimes will keep them in, sometimes it won't. And it does put you into drawdown. If obviously your stop loss is above here, then you should be okay. But you know, why do you not want to enter from there when you think it's going to enter from there? And if you miss the trade, then don't worry about it, because I guarantee I'll put my house on it. You're going to get a potential another entry from lower down. Yeah, so even through here, price will come back up and entry from there. You don't have to catch the highs and the lows. Yeah, it's not what it's all about. If anything, it's more dangerous to be catching a trade from here because this is where it's volatile. Price is on the hunt to take liquidity out. If it does this, it's going to sweep you out and take your liquidity. Just allow the damage to be done. Okay, leave it be. There's absolutely no need to jump in early. Yeah, we're pretty close at the moment. How far are we? 40, 60 pips, 50, 60 pips away. This again could potentially be a Tuesday high. So through the night or tomorrow, it could just do nothing. Yeah, maybe create even more liquidity to be taken. Possibly tap into here. Yeah, to then push us to the upside, and then Tuesday high we could see there. But yeah, I'm not saying it's guaranteed. It doesn't always work, like I say, but yeah, it's something just to keep an eye on. Yeah. Anything else, guys? Pretty good.
I'm good.
Anything in the chat? Where's the chat go? No, anything else? No worries. All right, guys. So
Thanks, mate.
No problem. See you tomorrow. Like I say, if you want my attention, you won't get it in Discord. I'm never there, guys. So just message me. I'll do it again. I've been doing this pretty much every week. 07434504277. Just WhatsApp me. Send in the video trying to explain what you're trying to look at. And obviously, it's a lot easier for me to. You can't do a video on Discord, and it's super annoying trying to explain stuff with text. So yeah, message me on WhatsApp or Facebook Messenger, and then obviously we'll work some stuff out, guys. So have a good week, and I'll see you tomorrow. Cheers, guys.